Taxes are an honor to pay. Yes, I used to believe that, and I still do, but I've added caveats. Canada is a great country, and Canadians stand on the shoulders of generations of hardworking, honest taxpayers who built this nation, allowing us the honor to keep expanding on that gift. But dissent and antagonism have become our real pandemic, one that has been growing for far too long. We've given up being Team Canada to become free agents, everyone for themselves. And as a house divided, we will take the fall unless our ideals get renewed. It is in being thankful for how the work of our neighbor benefits us that we can regain the pride from benefiting our neighbor. We need to stand up for our rights so that all Canadians are better protected. Finding your voice and demanding fairness for all needs to become a Canadian trait once again. And we need to start at the top by addressing our public servants and insisting they remember who serves whom in this democracy, and demanding that they extend fair and equal treatment for all. Our public servants have gained a perverse freedom to dictate to taxpayers instead of working for them. That is the greatest possible inversion of roles, and one that will destroy our national pride, values, and future growth if it continues. Even in judicial and taxation roles, the core responsibility for Canadian authorities is to assist fellow countrymen. But the doublespeak of elected officials and the publication of millions of pages of extrajudicial government guidelines have so clouded these defined roles that there is no longer any oversight possible for even the most junior bureaucratic position. That lack of oversight means that abuse of power is guaranteed, especially with the size of government exploding along with the cost of running it. Prime Minister Trudeau and every other MP in this country is fully aware that the Canadian Revenue Agency has become a source of fear for far more Canadians than ever before, and he has spoken to the issue. His seemingly sincere mandate letter to the National Revenue Minister speaks about addressing the abuses that this bureaucracy is widely charged with through compulsory transparency and fairness. On the one hand, his words demand that the taxpayer be treated like, quote unquote, valued clients. Yet on the other hand, he keeps expanding the CRA's powers while adding thousands of new CRA staff, mainly auditors and collectors, to harangue the taxpayer with greater effect. It's just more doublespeak. Yes, there are tax evaders in Canada, but not truly that many of real consequence. And those of real consequence don't seem to be the target of the CRA anyway. Maybe there's mutual respect between the small groups of con men sitting on both sides of that table. Tax evasion has never been a burning issue in Canada. True to our stereotype, we're just not that driven a people. The CRA's aggression is not the reason for this compliance. The reason is that we are, for the most part, an honest people. And yet our CRA has 5 times as many personnel on a per capita basis as the IRS in the United States. Why? There can only be one reason. The government of Canada is running at a tremendously inflated burn rate and is willing to smear its own people as tax evaders to squeeze more money out of the citizens who have already paid their fair share. Our government believes that there is a good long-term ROI in investing in an expanded and aggressive tax arm. Despite this strategy yanking our moral compass off pole. So let's stop talking philosophy and see if there is any merit in this decision, financial or otherwise. Deciding to empower this bureaucracy with huge clout but little accountability does increase the cash flow to the Treasury. That is the instant gratification that comes from playing whack-a-mole, no skills required. But long-term growth of an economy is 3D chess, and my premise is that Canada is giving up all its power pieces for a strategy of buying an extra line of pawns. Here are the main goals of a tax department that must inform all of its decisions. The first is to ensure collection of all taxes that citizens and corporations owe within the legal mechanisms granted to them and for the benefit of society, with an emphasis on increasing inflow to the Treasury. No problem. The second, to ensure an economic environment that fairly maintains a business-friendly appeal while protecting steady profitability increases for appropriately run companies of all stripes. And the third, to maintain an attractive appeal to both domestic and international investment in Canadian ventures and create obvious benefits for global players to establish Canadian operations. Literally, the first responsibility is unsustainable without understanding its impact on the second and third. The forecast for the economic growth provided by number 2 and number 3 is very dim when a nation gains a name for unfair tax practices. Canada knows this and has gone to great lengths to mask a rampant increase of aggressive and unsupervised behavior. Here are quotes made throughout the last decade from judges during criminal court cases between the CRA and individual taxpayers. Justice Robert Punnett found that Tony and Helen Samaru were victims of an egregious prosecution and reprehensible conduct. Justice Norman Douglas stated on the obvious innocence of John Marsden that one would think he would be the last person of interest to the ever-vigilant gaze of Revenue Canada. Judge Douglas went on to state that the CRA had clearly breached their own code of conduct, jumping the gun based on tunnel vision to bring criminal prosecution. Justice M.A. Humphreys made 2 landmark rulings on the case of Irvin LaRue. One, that the CRA owed a duty of care to LaRue to deal with him in a non-negligent manner. And 2, that this duty of care was violated in applying crippling penalties for misreporting his income when there was no such reporting inaccuracy. The CRA also attacks large corporations with many results, like in CRA versus Cameco. Justice Owen stated, "There is no evidence on which to base an adjustment for these services, even if one were warranted," which he had already stated there was not. Judge Owen further elaborated on transactions in series involving Cameco, stating, "The focus of the test is the commercial rationality or irrationality of the transaction or series," and then pointing out how rational Cameco was. In the CRA appeal of the Loblaw's decision, Judge Judith Woods states, "The Crown submits that given Loblaw Financial's position is accepted, the very target of the FAPI legislation, which is an investment portfolio held offshore, would be exempt. The concern is a valid one, but it does not enable a court to give the legislation a broader interpretation than it can reasonably bear." Judge Woods went on to note that the federal government had already amended the law to change the definition of a foreign bank specifically to address this law, making a lie of the CRA's defense statement that a Loblaw win would nullify the purpose of the foreign accrual property income rules. That rewrite also made clear that the CRA knew the initial version was inapplicable to Loblaw's structure. In every one of the above cases, the CRA has appealed without hesitation, multiple times. The Samarus had been charged with 28 counts of tax evasion, but not one stuck in any judgment. However, their victory of a $1.7 million compensation payment from the CRA was short-lived. The CRA appealed, overturning any financial penalty against the bureaucracy, and the Samarus received nothing for the loss of their life, family, and business. The CRA had destroyed with impunity. The CRA never tells that story truthfully. They just state they were victorious on appeal and then let the assumption stand that the Samarus were proven guilty of tax evasion. That's a dirty spin. Marsden was earning very little when he was charged with tax evasion. The CRA appealed but could make no case in either proceeding. However, this was again perpetrated with impunity, as they argued that financial pain was incidental to Marsden's life, simply ignoring the pain and suffering they had caused. Irvin LaRue is held up as the Canadian taxpayers' prime victory. He stood up against bizarre charges that were baseless and actually caused by mistakes in the CRA's own audit activities. The CRA appealed 3 times, stretching the pain of litigation out over 18 years. Losing on each charge of tax evasion, but winning the right to impugn a man and destroy his life without penalty. Though the tax law community refers to the LaRue case as a massive win, this is a man who was dumped into his mid-70s, penniless and in ill health. This is the very definition of a triumph without glory, and it is just wrong. The corporate examples outline more irrational thinking from a bureaucracy that has too much brainpower to be doing this with no reason. In Canada, companies pay for regular outside audits, usually done by one of the 5 top accounting firms. Whoever runs that audit is liable for the accuracy of those resulting numbers. Likewise, the public company must maintain a board of directors made of outside experts who also take on full liability for the resulting audit. The pay scale within a large corporate structure far outstrips that of a government bureaucracy, and like it or not, that results in far more innovative accounting solutions that get tested by top law firms before being implemented. The CRA knows all of this. So again, I ask, why does the CRA proceed with these actions that cannot be deemed anything less than abusive? Consider the magnitude of the CRA's claimed tax gap. The CRA claims that there is a tax gap between what should be owed and what taxpayers claim as their due taxes, which the CRA states is in excess of $20 billion annually, or close to 7% of overall federal corporate income tax revenue. The Parliamentary Budget Officer, Yves Giroux, counters with a number nearer to $4 billion. Again, though this is the logic the CRA uses to support requests for more auditing and collection power, it makes no sense unless you look at it from a debt point of view. The CRA uses Statistics Canada analysis to forecast tax revenue numbers, which the World Bank takes at face value. But the World Bank also looks at previous year's tax revenue, which always refer to the outstanding tax gap as part of the assets column. After many years of the tax gap being regularly just written off, one has to assume that this is a ploy by the Canada's CRA to inflate their asset column and ensure higher borrowing capability while sustaining our admired credit rating. Between Loblaws and Cameco, cases that the CRA could never win, the only reason to keep appealing is to keep an imaginary $500 million payday from being deleted from the tax gap asset column. In a bizarre way, it is the CRA that is perpetrating tax fraud. It is easier to spot the incongruities when huge public companies are involved, but abuses are far more rampant as the numbers involved get smaller, and the smoke and mirrors also get more prevalent. The CRA could not escape getting egg on their face after Irvin LaRue obstinately maintained innocence through 4 judgments on the same charges. He just refused to die, and not one tax evasion charge stuck to him. Even though he won no compensation, he was proven to be totally innocent. The CRA considered the LaRue case a PR disaster and felt a need to publicly state some mea culpas to maintain an appearance of professional credibility. A committee was drawn together to decide what makeover could give taxpayers confidence that there were protective steps available that kept the CRA accountable. The committee outlined 2 measures to instill that accountability: a taxpayer's Bill of Rights to fully define the limits of activity that the CRA could take, and a new taxpayer's ombudsman's office to address and review claims of violations of those new rights. These measures were advertised through government publications and became broadly known to more than 9 people. The Auditor General, another government watchdog, applauded this clear move towards increased transparency. Transparency? And did he say clear? Nope, it's just more smoke and mirrors. The 2 steps were implemented, but in a completely manipulated manner. Canada now has a taxpayer's Bill of Rights that, when quoted to CRA personnel, gets the dismissive reply, "Yeah, but those aren't legally binding." The CRA has published rights that they ensured no one has the right to demand. When I asked for confirmation on that, I received this reply from Kathy Hawara, Assistant Commissioner of the Appeals Branch of the CRA. The Taxpayers' Bill of Rights follows an approach accepted by numerous national and international tax administrations to promote tax rights through the use of non-statutory declaration or charter of taxpayer rights. It is not legislated because it includes service rights, which cannot be enforced through the court system. Just for your information, both the US and the UK have taxpayers' bills of rights that are legally binding. The US codified these rights in 2014, and the UK gave the rights legislative backing by inclusion in the Finance Act in 2009, updating them in 2016. Also, for your information, in its preamble, our own Constitution guarantees that our rights will reflect those written into law in the UK. The CRA just refuses to give taxpayers rights that are binding. As for the taxpayer's ombudsman, that position is a 5-year placement, and the new taxpayer's ombudsman, Francois Beaulieu, has just replaced Shira Prophet, who completed her tenure in July of this year. She was very forthright in her final report, publishing it in June of this year, and in her capacity as a lawyer full well knows the implications of her words as she writes how the structure of our taxpayer's ombudsman office has an quote-unquote inherent element of conflict of interest, and that's because her role reports exclusively to the head of the CRA, the National Revenue Minister. And her legal advisors, they are the same lawyers who bring criminal charges against taxpayers. And yet, emblazoned all over the taxpayer's ombudsman's website and documentation are these claims: independence, objectivity, and operations at our arm's length from the CRA. It's all just smoke and mirrors. Anyone who is willing to do the homework can quickly surmise that the CRA is bending over backwards to control their own narrative. Though privacy rules are in place to protect the citizen, the CRA constantly uses these to protect themselves and cover violations of rights. Every journalist who asks questions is fed the same response, even when the CRA's victim sets aside personal privacy protection and signs documentation allowing the journalist's representative standing. The answer is still no, with an explanation of how duty-bound the CRA is to your privacy. They even use that ploy to stop the government's own parliamentary budget officer from reviewing the tax gap that they claim. The CRA makes it unbelievably difficult for taxpayers to access their own file data, delaying responses for months, even years. No government has yet had the moxie to legislate ownership of those files to the taxpayer of topic, so the CRA is free to ensure access to those files is difficult in the extreme. By delaying and dragging out responses, the CRA creates their own statute-barred defense. By lagging across their own arbitrary statute of limitations, they force the taxpayer into a legally barred situation where they can no longer make any claims. In our courts, the CRA uses the people's money to litigate, to constantly appeal, and to relitigate, dragging the taxpayer through years of legal proceedings, making every outcome just too painful for the taxpayer. All of this is regardless of the abuse to lives, damage to society, and abuse of our court system. The CRA put out a Bill of Taxpayers' Rights that speaks to accountability while being totally optional in its implementation, having the appearance of righteousness, but denying the power thereof. And to top it off, they have a taxpayers' ombudsperson of their own choosing who reports directly to their lead minister, a structure their own past ombudsman states is a conflict of interest and devoid of independence. The effect of these findings are summarized in the words of one of their own. According to Jeff Perry, a former CRA auditor speaking in an interview with W5, he says, "Their goal is to break the taxpayer. CRA auditors have the feeling that if the person has no resources, how are they going to defend? People go and they'll pay their assessments even though they know they're not true assessments because they cannot afford the process." My name is David Elderfield, and I founded and ran an R&D company that the federal government asked me to proceed with establishing. Wayfair Identifiers, Inc. was a pre-revenue developer of homeland security technology and was self-funded, running off of after-tax savings and assets that my team personally put up. A team that was not taking a cent of income. Our situation was the penultimate example of an operation that carries zero tax liability. So this is the case study that I am using to support my request for broad changes to ensure accountability around all CRA activities. The activities that they applied to my company, WFI, Wayfair, included every one of the ploys that I have already outlined. The Wayfair team was in their third year of developing border security tech that was endorsed by 4 top ministers in the federal government, including the Deputy Prime Minister, 2 provincial premiers, and had already signed 5 strategic partnerships with top global companies: Equifax, Alcan, CP Ships, Reimers, and CSAFE. It was at this point when the CRA, without warning or explanation, froze all the operating funds the team had loaned to the project. The only reason we have ever received for this took 2 years to be revealed, and it was that they had received, quote unquote, a credible lead from someone with an impressive financial background. If true, someone had wanted to, and did, weaponize the CRA in order to sabotage us. This anonymous lead would have to have been believed, despite our having had regular meetings with the CRA's own SR&ED arm, who approved all our losses, and had to have been believed above all our GST returns, which were based on no revenues. As a founder and CEO, I felt responsible. So I tapped into the value of my home to cover short-term operations while this was all worked out. Big mistake. The CRA called my personal banks, and their activity spawned a recall of my line of credit with only 2 weeks' notice. I was trapped and had to allow foreclosure to take place. In front of the foreclosure judge, the CRA representative proposed a number to settle with and halt all further CRA interference. This was paid immediately out of the house proceeds, but was stated right then and there as not owed, and it was given with the intent of recovery through the following year's tax return. After all that, the payment was never acknowledged by the CRA, even though it was paid through the courts and endorsed by the Bennett Jones legal team. The Wayfair accounts were unfrozen only after another month and a half of haggling, and I placed much of the house proceeds into the current accounts. 8 weeks later, the CRA froze all those accounts again and were demanding an 8 times higher settlement number. At the same time, they finally agreed to run a full corporate and personal audit on me and the company, something we had been demanding for over 5 months by that point. My team diligently tried to schedule that audit for nearly 2 years. Delays, dragging their feet, changing the personnel in charge of my file, even setting 3 different time slots for that audit. All of it was a lie. The 3 scheduled times were each canceled with almost no notice, or even less than no notice. Our boardroom was tied up and in prepared state for an audit, with our lawyer sitting there waiting for it to begin, and we did not receive the cancellation call from the CRA until 30 minutes after the kickoff time. A second schedule took months to set, but we finally received one, only to have a cancellation call 18 hours in advance, barely sufficient to notify our accountants at PricewaterhouseCoopers. A third was set 2 months after that, set by a call from a CRA representative late on a workday, stating they would arrive at 8:30 following morning, just 16 hours away. We could neither get legal or accounting professionals to arrive in time, so we stayed through the night preparing. The following morning, that CRA representative did show up on time, just long enough to state in a loud voice, "I'm not doing this," while he waved his arms and walked out the door less than 60 seconds after arriving. 4 team members watched this after having spent the whole night preparing. It turned out that, according to the CRA's diarized notes that we finally received 7 years later, they had decided to assess us without any data 3 weeks prior to that audit date. And they clearly knew about that audit date. Immediately after the last failed audit, we were legally demanding all the data that the CRA was holding. And all that arrived was these diarized notes that took 7 years of constant legal request, follow up by lawyers and accountants, and our own calls to get them to arrive. These diarized notes also completely document the most disturbing lie that the CRA auditor stated. 10 months after the final audit date was walked out on, entries are made that state we had refused to give the CRA auditor access to our books and records. A lie that is easily countered by lawyers and accountants that had witnessed our preparations, witnesses that saw the auditor arrive and leave in under a minute without any words from us, and many vendors who saw the preparations that took up our boardroom for 4 months. But there is an even more disturbing factor around this lie. It is so bad. Despite all our proof, and regardless of our proof, the tax code itself states that it is an impossibility for a taxpayer to interfere, let alone stop, a CRA audit. Read 231.1 of the Tax Act. The excuse they gave themselves is not even possible, and any attempt by us to interfere would have been noted immediately, not covered up with an entry in a log 10 months later. Though the time and effort expended trying to work with the CRA had been wasted in the previous 2 years, we had not lost any time on developing our technology. We had finished 2 alpha field trial tests at harbors in the UK, and we had finished up 6 patent applications. All of this had drawn more venture capital interest into the company, and after 3 negotiations with 3 different firms, we had settled on one that was willing to put up $6 million US, valuing our operation at over 17 million Canadian. Frequently, getting to the cusp of success requires your very last dollar to be spent. And this was just the case that was happening with WFI. We had made a lot of headway, but the CRA just didn't care. We were no longer in a position to stop them. And when they came hard. We soon realized they were going to seize everything. The loss of WFI was more than just the loss of a company that had binding contracts valuing it at 17 million. It was the loss of jobs. It was the loss of my life's work. And the CRA made sure it was the loss of my career. The CRA's next attacks were deeply personal and specifically targeted only me. Finding a rental contract that I did not fill in, did not sign, and did not directly benefit from, they took one number from the application portion of the agreement to state I had hidden personal income. That number had been explained to them a year prior, and they had even documented it in these diarized notes. And it was fully explained in the rental contract itself if they had just read the proof of income section. The amount was the $120,000 of potential income my partner and I might have taken in one of the venture capital agreements. That venture capital agreement had collapsed because of the CRA's activity. But it was never realized income, and the rental contract proof of income section only referred to it as potential income for one contract. Ignoring all of these facts, the CRA went ahead, took the number of 120,000, which was only half mine if it had been realized, and turned it into 120,000 per year for 6 years of income. Now, what any lawyer, good or bad, will tell you is illegal is using only your preferred portion of a contract as proof, instead of using the contract as a whole. But in the case of this rental agreement, the CRA did that anyway. So I have spent years trying to get justice for the loss of life, family, savings, assets, career, and my life's work. Starting again, an impossibility, since after doing $21,365,000 in damages, the CRA still insists that they are owed a further $560,000 and have disallowed me even the ability to have a simple bank account. The CRA has broken 13 of the 16 taxpayer rights they have published, but have no qualms stating those carry no meaning. The taxpayers' ombudsman opened 3 files on this that they then forwarded to the CRA, where they went to die. Then Senator Percy Down, who was a minister in the government that requested us to proceed with the R&D initially, personally placed my data package on the desk of the ombudsman. We received a letter stating that the ombudsman refused to even open the package since the revenue minister had involved herself and had backburnered us. Conflict of interest to the nth degree. We have taken the political route and the media route. We had deep proof of the taxpayers' rights issues that no one seemed to care about. So we went to the next step and outlined how at least 4 charter rights had also been violated. For years, we have made that case to the government and kept it in front of them. 5 MPs have forwarded letters of concern through numerous bureaucratic channels, and all have been totally ignored. Now that we have used up every possible approach to get a domestic authority to review what is clear abuse of power, I am now allowed to present to the United Nations under their Declaration of Human Rights, a document that Canada has signed complete agreement to uphold. Canada needs to change this. I shouldn't have to turn to a human rights argument. I shouldn't have to go this far for justice. And it is just not that complex. So don't believe them if they tell you it is. Let's start by making ownership of CRA data on a taxpayer the property of that taxpayer. We've done this before on our private medical files. In 1993, our Supreme Court mandated that we own our health data and must be facilitated in having expedited access to those files. That change heightened medical accountability across the board and improved healthcare. If our confidential medical files can be treated this way, so can our tax files. Simple, clean, proven. Tell your MP you want this, and you want this now. Thank you for spending your time with me today and for taking an interest in this topic. I'm David Elderfield, and I'm passing responsibility on to you.